All right, everybody, welcome back. So let's just take a few minutes. We'll take kind of a high level look at where we are in this business cycle. And specifically, this is geared towards small business owners, people that might have business to consumer, business to business type business. A lot of these guys don't have a whole lot of an opportunity to kind of step back and take a look at where we actually are in the broader business cycle. So whenever I talk about Fibonacci, so who exactly is this and how exactly are we using what he taught us? So this guy is actually from the late 1100s, early 1200s. He was a famous mathematician in Pisa. So if you've ever been to the Leaning Tower, you may have actually seen a landmark nearby. He's got his own statue in the town. He's who we refer to whenever we're talking about Fibonacci. He's famous for his Fibonacci sequence as well as the ratios. The sequence is fairly simple. It's just adding the previous number to the next number in the sequence. So 0 plus 1 is 1, 1 plus 1 is 2, 2 plus the previous number of 1 equals 3, in through infinity, so the numbers can get infinitely large. So the finance and trading, the Fibonacci sequence helps people guess, and that's exactly what they're doing. They're guessing what things like stocks, crypto has taken a big interest in this lately. People that are trading equities, futures, options, all of these kind of fall along these Fibonacci ratios. So basically what they're doing is they're just looking for support and resistance areas. And these numbers can kind of give us a little bit of a hint of, all right, this is where maybe we've gone too far, time to retrace a little bit. Whenever we're looking at something like the 1987 crash where we retraced 50 some odd percent. So the market actually went back 50 some percent. The 2020, whenever we went through that little COVID spell, the market actually traced another 30 odd percent. So depending on what you're actually looking at, you can kind of keep an eye out for some of these Fibonacci levels. It sounds a little bit complicated, but Fibonacci is really just a simple pattern that helps us see the order and predict where things might be headed, whether it's how plants grow or how the price of the stock market actually moves. So this golden ratio, which is 1.618, is actually part of all of us. It starts at a very microscopic level. So an angstrom is actually, I believe it's 1/10,000th of a micron. So extremely small scale here. And each one of these little twists of your DNA, which they call the double helix, is 34 angstroms long by 21 angstroms wide. So if you look at the Fibonacci sequence down there below, 21 and 34 are both numbers that are involved in that sequence. Whenever you divide 34 by 21, you get roughly 1.618, which is that golden ratio. In this case, it's such a small small number. You see it actually ends up at 1.619, but we're not cutting hairs whenever we're talking about something that's actually so small. So the ratio appears in a lot of natural patterns. And whenever we see it, we see a lot of harmony, a lot of beauty. We see it in architecture. Going back to the Colosseum, a lot of these ratios, you'll find a lot of the 1.618, a lot of the arches involve a lot of Fibonacci numbers, as well as extending right on through modern day architecture today. So this house was built by a famous mathematician out in the San Francisco Bay Area, and it's built by I think it's Square 3 architects. So these guys came up with a pretty beautiful plan and kind of dedicated this house to all the little intricacies and arches and everything that go along with the Fibonacci ratios. So Fibonacci and the golden ratio appears so much in nature. We see it all over the place with sunflower seeds, tulips, daisies. And whenever you take a look at any tree that has a single trunk that's basically grows off of a single trunk, you'll see that it splits into two. Third layer up might have split into 3 branches. From there, it goes into 5. And there's a balance to that. As the tree gets a little bit higher, you'll see how it kind of knows this is where I need an extra branch and kind of equal things out. And it extends again down into the small things like the seashell, but it's what's known as fractal, meaning that it appears in very small things like shells, but also big things like the Milky Way galaxy. So you're going to see these similar patterns. They can be at any scale, it's tiny objects all the way out to the size of the universe. It's like nature has a universal blueprint it seems to follow from very small to the very large. So this also appears, so these Fibonacci ratios appear in our financial markets. So there on the left, you'll see the 20-year history of the S&P. And if we were able to zoom in here a little bit, you'll see that once it gets to 150 or even that 1.618 golden ratio, there tends to be a retracement. Something will pop up in the news and something will cause the market to retrace and kind of reset. And from there, it'll start a growth pattern again. And if we zoom in even to a weekly, daily, or inside a day, so this is an intraday pattern here on the right-hand side, you'll see that the market actually retraced to 88%. That's another Fibonacci ratio, but it also went on to extend their down below to a 1.618 extension and almost stopped on the dime and turned around and started heading back up. Financial markets are also seasonal. So I've been talking with a lot of business owners over the last few years, and there's been a lot of confusion. Like, why are we still going up? This doesn't, it seems out of the ordinary. And maybe your business is actually starting to taper off a little bit, but you keep hearing in the headlines where the market's setting new records. It's at a new all-time high. Well, it's something to keep in mind is the market is not the economy, and the economy is certainly not the stock market. So there's a lot of shenanigans that are going on. These markets have always been manipulated to some degree. People were complaining about it in the late 1800s. They're going to be complaining about it probably 100 years from now. So there's always things that some of these guys that actually run these big companies can do to manipulate the prices and kind of send them off to where they need to go. But it's very hard for them to even fight this Fibonacci ratios, and nature is nature. Whenever people get too overdone on something, they tend to pull back a little bit. Whenever things have retraced too far, people tend to get more comfortable. And there's patterns to all of this. It's been going on for centuries. So I've been running my own businesses for the last 30 plus years. I've seen a few of these seasons come and go, and this type of talk probably would have saved me a few $1 million had I known this whenever we were heading into 2008. Back then, I was a real estate builder. I owned a small company with my father. We obviously went through the downturn like everybody else did. But had I known, all right, now's the time to shore up a little bit of extra capital, an extra $150,000 would have saved me roughly $3 million and would have enabled me to get through the downturn that we all went through. So anticipating the market shift, basically you need to sit back if you're a small business owner and ask yourself, are you prepared for what might be ahead? So over the next 6 months or so, we're going to have a pretty good idea where we may be headed over the next couple of years. Could take us a couple months longer than that, but we'll really have a much better idea. Where we are in this market cycle right now is very tenuous. There's a lot of credit that's still available. So I'm actually able to help a lot of small business owners get small lines of credit, averaging about $150,000 for a small business that's doing some good volume. Not talking about your Fortune 500 businesses. I'm talking about your small business that might be operating, that you'll see a lot of trucks driving around, anything from plumbers to your small auto repair place that might be up in the edge of your neighborhood, the local liquor stores, any of these kind of stores that are embedded in any local community. All right, so I can tell you that some of these patterns are suggesting we could be heading into a challenging period. So some of you have maybe already been feeling it. The more I talk with business people all around our area, I live just outside of Washington, D.C., just outside of Annapolis. So I'm here on the East Coast, but I've been talking with people across the country. And there's definitely a hesitation that's going on right now. We've got the presidential race coming to an end here in the next few weeks. There's a lot of hesitation. People are maybe afraid to make some of these big purchases. Even this 50 basis point drop that we had by the Fed last week. It's exciting, but it's also maybe a sign that they see things that the broader economy has not seen just yet. All right, so there's the phone number if you definitely want to help get your company in a little bit better shape, shore up your financial position. Reach out. I'd be happy to discuss how we might be able to help you add a little bit of extra capital to your business so you can take advantage of whatever situation might pop up. Maybe it's an expansion, maybe it's just making payroll during a few slow months. And finally, last note. So this is an article that just came out a few weeks ago. Came out July the 12th. There you go. So this is something that came out by Fidelity, and there's a lot of different ways. You just don't have to use Fibonacci. There's probably a dozen different ways you can look at where we are in this market cycle. But to cut straight to the chase, this article basically goes on to say that, all right, using Dow theory, which is just a chart pattern you can use to confirm uptrends and downtrends in stocks, there's an indicator that's flashing a pretty worrisome sign. Doesn't mean that you take your eye off the ball, you stop everything. It just means, all right, be aware that where we are in this market cycle, things could be slowing down. So again, if there's something I can do to help, if I can help maybe take out a small line of credit or something for your business while this money is still available, I'd be happy to do that. My number is 443-599-8030. Look forward to talking with you, and we'll see you for the next market update. Thanks, everybody.